Hi guys, Christian here. Welcome back to our monthly video. In this video, we're going to discuss the expectations that we had going into 2023, where we're expecting a recession and a stock market crash, and how did we actually do in 2023, and how should we expect 2024 to go, and how should we trade it. Guys, if you are new to the channel, please consider subscribing. We do bring out at the beginning of each month the stock market outlook and overview for the month ahead. And if you do enjoy today's video, guys, please give it a like. It does help us a lot. Now guys, going into 2023, we were expecting a massive recession and a potential stock market crash. Now, how did we actually fare? This is the chart of the S&P 500, and since the beginning of the year, since January here, if we are to take what actually happened, well guys, we are up around, so far, around 20%. So what happened to that stock market crash? What happened to that recession? Guys, those were some of the articles that we had at the beginning, well, just going into 2023, at the end of 2022. This is one of the articles that I pulled out here, are the boldest predictions for 2023. Crashing stocks, another Great Depression, and a meatless nation. Now guys, everyone, and I mean everyone, was expecting that stock market crash following one of the worst years that we had on Wall Street. That was in 2022. Yet we got so far this year a 20% gain in the S&P 500, and that's why, guys, you should never believe what those talking heads are saying, what the predictions are, and you should just trade the market that we are given, not the market that we hope we're going to get. Okay, and this is very, very important. Now guys, as you can see, we had a massive gain this year. So where are we now? Well, guys, if I show you, we showed you this chart before here, but it's very important, I think, to bring it back again. Here's the S&P 500 again, and those blue lines indicate the gaps that are still left open in the market. And guys, as you can see, we filled pretty much all the gaps that we had to the upside, apart from one that's left at 4661. And we've got a number of gaps to the downside. Now guys, we discussed this before, but gaps, they tend to be filled. We can't be leaving so many gaps behind if we want to go and make new all-time highs, and we want to go to those predictions that we're getting now for 2023, which are like 6,000, 7,000, the S&P 500. Now funny enough, guys, we have one gap open here, which coincides well with the retest of this trend line. So I wouldn't be surprised for us to go above the July highs. In this case, I will just take that liquidity, go back up, fill this gap that's left open, that's still left open, touch the trend line, and then go down and try to fill some of those gaps going into 2024, guys. Okay, that's going to be very important. Now, one of the things that supports this argument, guys, those two charts here. This is the bull and bear sentiment, guys, and we are now, this is for retail traders. And so you can see here, guys, as of December, the 1st of December, retail traders are most bullish since the end of the beginning of 2021. And guys, as we got close this year to this bullish level here, you can see that the most bullish that retail traders got this year was in July. And if I could go back here, July was the top, guys. July was the top of the market in 2023. Now retail traders are even more bullish than they were back in July this year. So something to be cautious about. I'm not saying we're going to get a crash like we did back in July, but a pullback here, guys, will be more than welcome. Now another chart I'm going to show you guys, which I think is still very, very important to have a look at. This is the the chart of the S&P 500, and what we did over here, guys, we overlaid the percentage price oscillator. And guys, what this oscillator measures, it measures the percent difference between the two short duration moving averages, okay, which is one way to technically gauge the momentum of a trend. And as you can see, guys, every single time we've got a crossover downwards this year, it either signaled a pullback or it signaled a pause in the S&P 500. Now we are very close here to getting another sell signal, another crossover downwards of this indicator, which would suggest, guys, another pullback or perhaps a pause. But anyway, what we're trying to say here is that the upside may be potentially limited going into year end here, guys. Okay, so something to be aware of unless we get a pullback. If we get a pullback or a pause for a week or two, okay, then we're getting to cool off the indicators and we are ready to move in higher at that point, and perhaps to the to our target here, okay, to filling this gap. Now guys, let's go into more detail here and have a look at the S&P 500. And one thing that I wanted to show you guys is the upper expected move for last week. As you can see, price went all the way up, and if I can just zoom in back to 1 hour chart here, price pulled all the way up, guys, touched the upper expected move for the week, and that was resistance for the week, guys, and we are pulling back since we are pulling back down here. So that's why, guys, those upper and lower expected moves, we discussed this a lot in our courses and we discussed this a lot in our Discord channel as well. The upper and the lower expected moves for the week, guys, and the month are very, very important. So make sure you pay attention. I'm going to give you the upper and lower expected move for the week ahead in a second here. Make sure you draw them down because they're very important levels. Now, as it stands, guys, looking at the short-term time frame here, as it stands, we have made a new higher high, clear those highs, clear the liquidity resting above there, and we are now pulling back. We are at support here, guys, and as long as we hold that support, then we are, we are definitely going to go higher here. However, guys, if we close below, then we have a lot of liquidity to grab short term. And if we get a close, I mean, here we have some sort of consolidation, so not a lot to talk about. If you actually zoom into a 4-hour time frame here, guys, we are, and if we are to look at the momentum here, so we are making new higher highs, guys. This is very bullish. Okay, we are making higher highs and higher lows, higher highs and higher lows. There is nothing to tell us that we are going to go down. However, guys, we are going up on negative momentum here, so it's just telling us that the momentum is slowing down, so something to be aware of. Now we do have our we've got plenty of liquidity resting above here, guys, so make sure that you are aware of that. If, guys, if, and this is a potential bearish scenario here, we may get a sell signal here from a highly elevated level. That doesn't indicate a crash or a pullback. It can just indicate a pause as well. All it's telling us is telling us that the upside may be potentially limited for now. Now, guys, a potential bearish scenario here, guys, okay, would be for us to go close down. Okay, I want to see I want to see a move downwards, okay, with high momentum. And if we do get a close below that IC there, I'll be looking for a pullback up into this level here, and then there we may potentially get a short. And where do we get a short to, guys? Well, I would like this IPA here to be filled and back into this IC, guys, and that may be a potentially nice buying opportunity if we get that, guys. We are only looking for that if we can get a move down here with high momentum. Okay, if we do get like a couple of candlesticks, very low bodies here that we close below, I wouldn't be inclined. But if we get 1 or 2 candlesticks and a quick move down here, close below this level here, then that will potentially trigger a much bigger correction, guys. Unless we can close below this level, then yes, we are definitely going to make new higher highs. And just pay attention of the upper expected move for the month of December, guys. That's going to be very, very important. As of now, guys, we had such a big move here, not a real pullback. We had a consolidation. That may be a fake out where we go up higher. Okay, we go up higher, suck in more bulls, and then we come down. So watch for that. However, guys, this still looks very, very bullish. We did have this gap here. We closed above it, and that should act as support. And if that acts as support here, guys, we are definitely going up higher. So watch out for that, okay? No reason to be bearish just yet, okay, guys? The market can stay irrational longer than we can stay solvent. So don't try to make irrational decisions. The market looks still bullish for now, okay, guys? So unless you see a break of structure on, I would say, a 4-hour time frame, then this can still go up higher, guys. So watch out for that. One thing, the next thing, guys, that we want to look at is Apple. Now Apple, guys, has crossed above it. So we discussed this in our previous video, and we said that this trend line has been massive resistance in the past. But guess what, guys? We blew through it and we went up and filled those gaps. We had a couple of open gaps here. Guess what? We filled them all. Now we are getting a sell signal here on Apple, and which again, guys, doesn't mean we're going to pull back. It just means that the upside is limited here for now. We do have all-time highs liquidity resting above there. However, guys, if we do get that sell signal and we close below this level here on a daily basis, then I will expect a much bigger pullback to at least either fill this gap in and stay into this IC, or retest this trend line. One of the two, guys. So monitor to see what price does. But if we do get a sell signal, and it's from a highly elevated level as well, may indicate that the the upside is limited for now, guys. If we do go up higher, then I would watch for that all-time high liquidity to be grabbed, and then look for a potential break of structure there to go lower, guys. It's not the time to go all in now, okay? Not just yet, okay? Watch out for now. Next, guys, we're going to discuss is the DAX. Now the DAX had a massive move, guys, and it's the economy is struggling big time, yet the stock market is going higher. So it's either they are pumping behind the scene, they're just printing money and dumping that into the stock market, or there's something going on here that's not fundamentally driven here, because there's something is going on here. Now, guys, we have to take the market that we have, not the market that we wish to have, okay, or that we hope to have. So this is what we've given, so we have to deal with it. Now the 8-hour time frame here is showing us that we are overbought, and it's telling us that, guys, we have all-time liquidity here resting above this high. So we are entering overbought into the daily time frame as well. Now we may get a pullback here, and then we may get this liquidity cleared. I mean, we had such a massive move all the way from the lows here. It just makes sense for the liquidity to be grabbed. Whether we have a pullback before and then we go and grab it, or we grab it here and then we have a pullback, that remains to be seen. But for now, guys, and to be honest, I would prefer us to go up higher, clear that, because if we do, we will have negative divergences here on the 8-hour time frame, and that will make up the case for a much bigger pullback down. But for now, guys, you can see this is bullish. We have no break of structure, okay? So there was no reason to enter short here anywhere for now, because we didn't get that break of structure. The structure was bullish all the way through this level here. Now we are getting, okay, so you should be careful going long at those levels here, okay, with overbought and liquidity just above there. I mean, either you go short term, okay, which won't really be worth it, or you wait for the liquidity to be grabbed. Then you want to watch for a nice pullback if we get it, and we should be able to get it, or a pause or a consolidation. If we do get a move down, guys, and we close below this level here, then that will anticipate a much bigger pullback down to those levels. I mean, look at this liquidity here, guys. Look at those lows, very clean lows. So a nice pullback down to those lows will be a nice opportunity to add long exposure at that point. Okay, next, guys, let's talk about the VIX real quickly here, because the VIX, we've got mixed messages about the VIX being dead. Okay, the VIX no longer being an indicator that we should be used talking about market volatility. And to be honest, guys, we haven't seen the VIX doing anything. To be honest, the VIX is at its lowest level, which tells us that it's the cheapest to buy protection in terms of puts, in terms of going short for a potential market crash going into 2024. So one thing that struck me here, guys, was this move here and here, because when we did have those two moves there, guys, we literally got no, and I mean we literally got no reaction in the S&P 500. So is this a glitch, or are they testing this for a potential big spike in volatility to come? That's something that's very strange to me. But if you look at the S&P 500 on those two occasions, we literally had no reaction. So why did the VIX spike just like that? Okay, so something to pay attention to. We did open up with a gap higher, which will indicate that we may go down to fill this gap here before going higher. But look at those levels here, guys. There is so much liquidity resting above those levels there. So for us to go all the way up there, okay, to at least clear the liquidity, okay, that would be a very interesting target to have. Okay, definitely a very interesting target to have. And watch the 15 level, guys. Okay, we do have more liquidity resting above there. If we can close and stay above 15, then the next target is 20, and you should be watching those watching the S&P 500 very, very carefully at that point. Next, guys, let's talk about the Dow, the US 30, because the US 30, guys, the last couple of weeks of last week, it had a massive pullback higher, a massive melt up there, and we are very close here, guys, to going and clearing those all-time highs, the liquidity resting above there. Very close, guys, very, very close. Now if we look at an 8-hour time frame, guys, we do have we've got very overbought here. Okay, so the RSI is very, very overbought at that point, guys, at this point, which suggests a pullback. Now we do have the liquidity resting above that, those all-time highs. Okay, so watch out for those, guys. As long as we can maintain, I mean, for now, I will look at this IC here. If price can stay above this, then we are definitely bullish, going and targeting more liquidity. If we close below this level, watch for a potential pullback, and then maybe we can get a short to where, guys? Well, look at those lows here. Okay, that will be a nice target. And this one here, I mean, this one here is just perfect here. If we can go all the way back down, that's perfect here. That's this clean liquidity, and that's also above this high that we had in October. So this is a very important level there, guys. Okay, if we can take those lows here and then pull back higher, pull back up, but don't close below those lows, then that will tell us that that was the pullback, and then we're going back higher. If we take those lows and then close below here, then I will look at this level here, guys, either the liquidity resting below here, or this I see as a potential long exposure. But for now, guys, okay, this is still very, very bullish. Don't try to short it unless you get that break of structure confirmation and a potential pullback higher, guys. Okay, last week I had this trend line here, but guess what, that was never broken, so there was no reason for us to go short. And to be honest, looking at this is very bullish, guys, very bullish. No reason to be short just yet. We do have a lot of confirmations that everyone is getting bullish, which may be the case that literally everyone just goes in and the market just spikes to, I don't know, 5,000 on the S&P 500 and the VIX just goes completely to 10, even 5. That's a scenario there, guys. Okay, so don't say that the market has to go down. No, it doesn't have to go down. Okay, and unless we have a catalyst, it may not go down. Okay, so we just trade whatever you have in front of you, which is a bullish market for now. Okay, next we get the US 100. Now here, guys, the last couple of weeks here we just had a consolidation, so not a lot going on here. For scalping, it was perfect because we literally just we took liquidity, then we went higher. Okay, we took liquidity here, then we went lower to take that liquidity. So for a scalping perspective, this was perfect. Now what do we see here? Not a lot, to be honest, guys. I mean, we did take the July highs here, okay, and we are now consolidating. Are we consolidating to go up higher to new all-time highs, or are we consolidating to accumulate short positions to go up and make either a new lower low here or take some liquidity? Now, guys, we did close above this gap here, which acted as resistance, now support. So watch this. If we pull back down in here, okay, as long as we're able to hold this level, then we can go and make new highs. If we close below it, then use this level as a potential resistance to go and clear the liquidity below those levels there. Okay, guys, if we are to look at where we are in terms of the weekly level, guys, we are close to new all-time highs. However, we are in this IC here, okay, which is very important. Okay, so watch this level here. Okay, a pullback would be healthy, as we said with all the other markets. However, we may not get that. Okay, and if we don't get it, okay, even this consolidation here, it lets all the indicators cool down, so we can go higher. So watch for that. We had a potential fake out here, okay, then we came back down. We may have a fake out down, clear the liquidity, and then go back into this consolidation. So watch out, guys. But for now, this looks bullish. If we do close below this level here, look at this level here for a potential pullback up, and if that level holds, that will be a nice short to take that low here. That will be a nice target. But for now, very bullish, consolidating, not a lot to go in here. Okay, so watch out. If we break above, come back, watch this level, okay, for a potential pullback down, and you may enter along here. Okay, and as long as that holds, aim for that liquidity at the top there. So those will be the trades for now. Next, guys, a very important thing to talk about here about the dollar is that we cleared this liquidity. We cleared the liquidity from the August lows, and that is very important. And watch out, guys, we cleared that liquidity and we have immediately pulled back higher. Now, guys, can we go, if we go above and close above this previous lower high, then we have broken structure. And if we have broken structure, guys, we are bullish on the dollar. And if we are bullish on the dollar, guess what, guys? The S&P 500 and the stock market in general may not get that bit higher. Okay, so watch out for that. The dollar is setting up for a potential rebound here. We may get another buy signal. The last time we got a buy signal here, guys, on the daily, it was all the way down here. And look at that move, guys. Look at that move. If we get another potential buy signal here, can we make new highs here on the dollar? But that's a potential, that is a definitely possibility there, guys. So watch out for that for sure. Okay, and if we do go up lower and we do have more lows, equal lows here, that may be taken. So watch out for that. If this level rejects here, okay, if we're rejecting this IC here, okay, because at the moment this is still in a downtrend, if we are rejecting that level, okay, and making a new lower low, then you know that we are heading all the way down there for sure. Next, guys, gold. And guess what, guys? Gold made new all-time highs. And that's exactly what we discussed, guys. In last month's video, we discussed the potential for gold to pull back down here into this IC, where we're potentially looking for a long opportunity. That's exactly how it played out, guys. So if you did get that, well done to you. Okay, that would have been a perfect trade there for you. So now that we've taken all that liquidity resting above there, guys, a nice pullback would be on the cards here. However, so we've taken that liquidity. Okay, now we pull back down. As long as we hold this IC here, guys, on the 4-hour time frame, as long as we hold this IC and we don't close below it, then we just pull back here and we make new highs, guys. Okay, I think a lot of people have went short over here, so there's a lot of liquidity resting above here. So as long as we hold that, yes, for sure we are going to make new highs. If we close below it, guys, I'm looking at this equal lows here as a potential downside for gold, especially if the dollar starts getting a bit here. Okay, so if we get a break of structure in the dollar, watch for a pullback in gold. But for now, as long as this level holds, new highs are on the cards there. Okay, so not a potential trade for now. Okay, if this pulls back lower here, then we may get a nice buying opportunity. Stop loss below. If we close below, then look for a short. Lastly, guys, let's talk about Bitcoin. Now, guys, Bitcoin has had a massive run here, clearing a lot of that liquidity there. Where is going to next? Where is going to perhaps clear that liquidity resting above the March of 2022 highs. Okay, so and we may get potentially new highs here going into 2024, guys, so something to watch out for. Okay, for the stock market, guys, okay, we may get 2024 they are expecting no recession and they are expecting Fed cuts, which everyone assumes that Fed cuts are bullish for the stock market and we are going to fly in 2024. Fed cuts, historically, they are bearish for the stock market. They will only cut prematurely if there's something wrong in the economy, so you don't want to see Fed cuts. And no recession, I mean, we didn't get one in 2023 because of the lag effects, but I think 2024 we may get one. How severe that would be, something to watch out for. I would say going into 2024, guys, go there with no expectations and trade the market that you see. Whatever the market gives you, take it as it is, and don't listen to anyone else, especially on financial media. They are not always for you, guys. Okay, they will come in and say whatever you want to hear, but their actions may differ from it. Okay, so be very careful, because it's going to be a very exciting year for MCI Trading Academy as well. So guys, if you did enjoy today's video, again, give it a like. It does help us a lot and it will motivate us to do more content in 2024. And if you do want to find out more about either the courses or the way we trade, or join our free Discord community, you can do so on our website, mcitradingacademy.co.uk. Thank you very much, guys, and I hope you have a great trading Monday and a great Christmas and New Year's.